WTF? Why did stocks rally like a rocket ship into the close and rally by 1.7%? Something that might be very important is that the last 10 minutes are what really matters. A third of all S&P trades happen in the last 10 minutes just before the close. So let's see what happened here at 350. We're at 524.8. We know the significance of this 524.8 area. It recaptures both of these, but then we went higher and higher and higher. We rallied by 3 more points. And this is really notable because we recaptured both 524.6 and 0.7, which means the bulls are attempting to flex. And is there going to be a summer rally? Well, the stats look really good here. After the S&P returns 5% in the month of May, the average return for June is 9%. Wow. What would 9% mean for stocks? Well, the first thing is, did we actually close higher by 5%? Yes, we did. 5.06. And we talked about the significance of 524, which basically means that we're now back above these previous monthly highs. So they should be support. And we're closing at a record monthly high. This is bullish. So how can we rally by 9%, you might be asking? Well, I tried to find the answer for myself too. So if we can go back to our template in 1995 on the left, we notice a pattern of 1, bounce on the 50, 2, bounce on the 50, 3, get close to the 50 after a new all-time high, and then we finally break out and go to new all-time highs. This rally right here, after we break out, is a 220% rally. A 9% move from where we are now basically gets us to 475. Remember, this is an average. It's not a guarantee. It's not the median. It's just what happens on average after we rally by 5% to close a month out. So what could really cause stocks to go up this much? Well, it would probably have to be 1995, and we would probably need to get some more evidence that we're going to be going higher from here. Here's what I'm looking at for next week. We got a Bank of Canada rate decision and an ECB rate decision, where we're expecting cuts on both. The BOC is going to be the first one to go on Wednesday at 9:45, and we're expecting a cut. And then on Thursday, the next day, we're also expecting a cut from the ECB. So if those two things happen to start the month off, wow, we're going to start wondering when the Fed is going to cut rates. Only a few days later, on the 10th, we got the Worldwide Developer Conference for Apple, and we've talked about what this means. They're going to be overhauling Siri for the first time in 13 years, and they're making a really big push into AI. I think they're going to announce an AI phone with partnerships like OpenAI and also with Gemini from Google and other companies. So I know this number seems incredible. It's a year's worth of returns after we go higher already this year. Remember, sell in May and go away. So what does this mean? Well, if we rally by 5% in May, it's a buy in May and go away. Then we're looking for a continuation. So what I'm really looking at here is if these come in with cuts, we're going to start wondering when the Fed's going to do it. That could definitely cause some relief. Like we saw in stocks yesterday, like the Russell, where these stocks started rallying when everything else was selling off. Small caps are likely only going to do well if rates start getting cut. A lot of them aren't profitable, but we're likely going to need fresh hype to continue the train moving forward. That's where I'm watching for the WWDC. And then we got CPI and the Fed after we get cuts here. And then we got a presidential debate to round the month out. So let's ask ourselves this. What really happened after we saw this news? Did we see major continuation selling? Well, let's look to the chart. Let's look here at NVDA or NVIDIA. And what do we know? Well, it closed red. So what does that mean? Well, I don't know what it means yet. If I go back to my pattern here, what I do notice that on the sell-off day, we actually close lower here. Then we go up for a little bit, then the fade starts. So what I'm less sure about here is whether we're going to get the rally up like we did in the first part, or if we just start going sideways. I don't think it really matters, to be honest. If I know go back here to the S&P, here's where things get a little bit more spicy. So we have a bullish engulfing daily candle with volume, which we saw into the close, and the last 10 minutes really matter. But if we go back here, bearish engulfing daily candle, bearish engulfing daily candle. But then look over here. We actually have a bullish engulfing candle shortly after. But we don't close over the previous highs. What does that mean? It's technically not the optimal bullish engulfing candle. Well, over here, we got something different. We get close to that 50 MA, fill one gap, and then it's a rocket ship higher, bullish engulfing daily candle. We filled our first gap here, which was right here. And I would say we got close enough to that 50 DMA to say we ran a test. So what does this really mean? Well, it means that we might be doing something different. The only way we're going to confirm that is by actually going higher. Right here, we know we have a downtrend. We have to get higher than this engulfing candle, which means if we're going to go higher for 9% into June, the first thing we need to do is to actually crack and make a new all-time high above 533.07. Let's call it 534. So we got to make it to 534 before we rally to 575 as an average. The other thing that's really notable here is that we have the pattern I love. I love this failed breakdown pattern. Why? Well, if we look here to the weekly chart, we have a megaphone. We pretty much bounced off support. But here's where it gets interesting, because a failed breakdown just means that bears made progress to the downside, but failed to hold it, right? What used to be support, or these higher lows, did not hold this week. We actually slammed below it. But then by the end of the week, the bears weren't able to defend the low. So what does that mean? Well, let's go back here to SPX on our weekly chart, because we've talked about this pattern so many times. Here we have a failed breakdown. That's a bottoming pattern, right? Potential bottoming pattern. If we want to see an expansion signal, we now have to close over the previous candle high. So what does that mean for SPY next week? Well, it pretty much means we got to make it to 531. So we're going to be within $2 to $3 of actually making that higher high versus that engulfing candle we just showed you. And that would also mean that we're going to be in a monthly green light. A green light just means that we're over the previous candle high, like into this month here at 525, because last month's high was 524. So what does that mean? It means once we get above 533, there's no friction, and we can definitely rally by a lot if everything I laid out does happen, meaning we get bullish news from the ECB, bullish news from the Bank of Canada, Apple comes in and delivers, CPI happens. If you haven't already, please consider smashing that thumbs up or subscribing to the channel. I would greatly, greatly appreciate that. So if everything happens, like, we're painting a perfect rosy picture here, but let's not get it twisted. We're not out of the woods yet. We need these things to deliver, and we have to go to a new all-time high. So if we're truly going to repeat 1995, what else could really give us evidence here? So if we look at a 1 month performance, everything's kind of doing okay. Some names are not doing hot, like Disney, McDonald's, right, Amazon, but broadly green, broadly up. And here was another thing that I was quite concerned about. I'll try to get to this in a moment here. We were looking at charts like RSP, XLV, healthcare, financials, and CAF, where they look like a double top. But if I briefly check in here now, let me go to my chart. If I look here to let's go do RSP first here, because one failed, but the other one's passed. I quickly did this before I hopped on here. So our previous top here is 164.9. Well, RSP actually rallied and closed over that area, closing at 165. Bullish. That's right. We actually recaptured this. I was a little bit concerned, but we actually got back over. Let's look at XLV. What did it do? It passed. Not by a lot, but it did. It's about 50 cents. The previous top was 143.4. We closed at 1437. Pass. It's not a double top for now. So we need to see that continuation higher. XLF was awfully close, but it didn't get there. It's within a few cents, like literally. How close is it? We're looking for 41.70. We closed 6 cents lower. So I would say a lot of charts got fixed up into the close today. Buying was fairly aggressive. If we look here at a 1 day performance, people bought a lot of everything, right? Energy, right? Things that were beaten up in the last month. And basically everything caught a bid today. So that's what we talked about yesterday, which was net rotation. Look at what happened to Salesforce too, right? Up by 7%. Snapback rally, whoop. So looks like there's still a bid out there in the market. So I want to see whether or not more follow-through selling happens here. Notably, there's 2 companies named. We've already talked about our template for NVIDIA. I'll go back here and show you that. I need to see a higher high. The other thing I'm really watching is going to be AMD. Why? Because on the weekly chart, we've talked about the significance of this previous all-time high. We're currently over it, but not by very much. It's by roughly $2. So if AMD can continue to go higher, it means that people are not worried about bad news, right? If bad news can't take us down, what could good news do? Make us go dramatically higher, like central banks pivoting to cuts, Apple having a new iPhone moment. Inflation comes in, Fed decides, and a presidential debate. Oh my goodness, this could be a perfect storm for the bulls. Maybe we do rally by 9%. Make sure to drop me a comment and tell me what you think, because this is just a working theory. It's not like I'm giving you a money back guarantee. And finally, if we look here to fear and greed, we're right back in neutral, which means we can either go one way or the other. Back to fear. We were in fear this morning, but did not hold into the close. And then these short sellers over here on the NASDAQ futures, As of today at 3:30, they're basically back to break even, just like fear and greed. What does that mean? The market is finding equilibrium and the bulls are flexing to give us some nice gains. So with that said, thank you very much for tuning in. If you want to hang out with me on Monday, please subscribe on the right or click the video on the left, and I will see you on the next video. Thanks so much.